guys, Eli Howard here. A lot of times you'll hear me talk about doing a financial checkup because it's really hard to determine your goals and where you want to go in the future if you don't have a good understanding of where you're at today. So I just want to give you a little behind the scenes look and show you all the value that's provided in this financial checkup. I'm using an example client here, Michael and Holly Scott. Obviously, I'm a huge fan of The Office, so what better excuse do I have than to use Michael Scott for this example client? And as you can tell, he actually did pretty good while he was at Dunder Mifflin. Both he and Holly have racked up a pretty good amount of net worth, and it kind of shows everything in there. We'll dive in here pretty quick. But it's not just about the numbers. What I love about this software and the value that we're able to provide is that it goes really in depth on financial purpose, what your goals are, and the next steps on how to get there. Because if you believe in values-based financial planning like I do, that is really the ultimate driver of why we're doing what we're doing and why we're trying to achieve what it is that we are trying to achieve. So not only that, has the immediate family information, Michael, Holly, and yes, for this example, I did use that Michael and Holly named their two kids after Jim and Pam. So pretty fun stuff, but also a lot of value here that I think you guys are really going to enjoy. So let's dive into the financial ratios that are generated through the financial information that you provide. You get all these different kind of ratios. This is your equity rate, your insurance rate, savings rate, burn rate, which is other known wise as the spending rate, debt rate, tax rate, liquid term, qualified term, real estate term, business term, and total term. So it has all these ratios. Whenever you and I meet, I'll really go through in depth and explain to you how you're able to read it, but each report has the calculation, so it's a little self-explanatory once you get the reports done. Household income and then annual spending has that down. It really puts really cleanly on your personal financial statement, really separates it between your assets, your debts, and all your different accounts, your cash accounts, after tax, pre-tax, personal real estate, business, everything. So it puts pretty much everything on there. And what I like to really generate from here is called a one-page plan. And this is what the one-page plan looks like for Michael and Holly Scott here. Has their financial purpose, has their goals, has their next steps, has that financial ratio elemental chart that I was talking about earlier, has their current annual income, estimated annual spending, has their net worth and everything. And it tracks your net worth as we go through, so you can really be able to determine, hey, are we meeting our goals? Are we saving more? Is our net worth growing? Or is it, are we just barely missing the mark and our net worth is going down slowly? Are we spending too much? Do we have too much debt? So on and so forth. So this really one-page plan paints a wonderful picture of really where you're at today, and how we're doing to meet those goals, that financial purpose, and if we need, the next steps or maybe tweak the next steps to meet our goals. Another report that I really like to run right here is called the total term, which essentially takes your entire net worth and it divides it by your annual spending. So that's where you get this number, 61, 61.3. This is saying that Michael and Holly Scott can live 61 years based off of their net worth divided by their annual spending. And like I said, the calculation is all in the reports. So there's no need to remember it or write it down. You'll always be able to, refer back to the reports. And that's not just good for you. That's good for me too, just in case I'm having a long day. So what I love, obviously right here, it tracks the total term on 90-day average or 90-day average change. It's gone up a little bit. So that's good to see. But it breaks down, what their net worth is broken down to by assets, liquid assets, qualified assets, real estate equity, business equity. And this really is a wonderful illustration of saying, okay, hey, maybe you have too much money in liquid, maybe you have too much money in qualified, or too much money in real estate or business, and really what you need to kind of maneuver, change. Maybe you're too diversified in one area, maybe you're lacking too much in another area. So really wonderful illustration that these reports are generated automatically once you fill out your information. And guys, that takes maybe 10 minutes of your time. I'll go into that here in a little bit moving forward. So total terms to go with. Another one that I really like too is a liquid term, because life happens. Whether you're someone gets sick, ends up in the hospital, car accident, one thing's for certain, life and disaster is going to strike. So you need some liquid cash. You need some money available. Again, here's the calculation. Basically, this is just saying that Michael and Holly could live almost 21 full years based off their liquid assets and their current annual spending. It breaks it down into personal cash, business cash, after-tax investments. And I think that personal cash is really good. That's a wonderful safety net. Almost $164,000 provides a lot of flexibility, not only in the emergency savings fund, because they have almost a full year of emergency savings saved up, but also they can start doing principal early payments, knock down some of their debt on their mortgage, and go into retirement debt free, which is one of their goals if you were able to see that on the one-page plan. So what this after-tax investments is, which they have $3.5 million in, typically that's going to be, your Roth accounts, it's going to be your cash value life insurance, or it's going to be your family trust if you have one of those, which in this example, the Scott Family Trust, that's where most of their funds are actually sitting. But that should also include the Roth and the cash value life insurance as well, wherever you can have that after-tax money and access to that liquid funds. Another report that I really like to run is the savings rate. You'll hear me talk all the time about savings rate versus return rate, and having a healthy savings rate it gets you out of trouble. Whether you're in the accumulation phase and you're exposed to the market and the market's going down, that savings rate really helps smooth out that down here in the market. Or if the market's going up, a good healthy savings rate only enhances those returns, really helps fuel those kinds of returns. So this savings rate is really important for clients. We like to say 10 to 15% savings rate is really good, but if you have 15 to 20% savings rate, you're doing phenomenal. So as you can tell, Michael and Holly Scott at 19% are doing fantastic. And it breaks down the savings by categories, whether they're pre-tax or after-tax. So it's very important to know what kind of accounts you're putting your savings into. Has an annual savings account, and it breaks down into the pre-tax, after-tax, and then each account in here. So it gives you annually, it breaks it down even monthly to how much you're saving to really provide a wonderful insight of where your money is going, where you're saving your money, and what investments you're really propping up with that savings rate. So here's the calculation again: total annual savings divided by gross total annual income, and that's where they get that 19%, which is really quite phenomenal. And it's really going to help them meet a lot of their goals as if they didn't have a really good foundation already. So, guys, this is something that I do totally complimentary, totally free service for not only my clients, but anyone that I come across that really just needs some help, some financial guidance. What happens is you'll book a calendar, appointment on my schedule, and we'll get on a phone call. I'll talk about your financial purpose. We'll talk about your goals. We'll talk about your next steps and how we can get there. And I'll just send you a link to this software. It's an app called Elements. I'll just send you the link to your email. And what you do is it takes 10 minutes to fill out, literally 10 minutes of your time. And this is all the value that's provided. Like I said, you can go through, you can add to it, you can change different things, you can keep it up to date so that you have a good understanding at all times where you're at in your current financial situation. And also I get access to it, so I can give you different pointers and different advice saying, hey, this is what we really need to change. This is what we need to fix for you to reach your financial goals. So guys, for 10 minutes of your time, the value that you get is truly, invaluable. It provides so much insight and really helps you out, and it's something that you can constantly track. So, and not to mention it's free. So why wouldn't you take advantage of it? Guys, if you're interested in this, just give me a holler and we'll get it all figured out and be happy to get this taken care of for you.